All right, folks, good afternoon. Welcome to 12-Minute Trading. This is Doc Severson, and I've got Dave Lukas over here of 12-Minute Trading as well, too. This is Monday, the 12th of December in 2022, and we have a little bit of movement going on today, but nothing compared to what we expect not only tomorrow morning, but also on Wednesday after the FOMC. Dave, how's it going out there, and what are you seeing with this market?
Oh, it's going well, and right now I am no trades until after the next couple days. I think we're going to see some fun fireworks. But gosh, I'll tell you what, I talked about it over the weekend, and my students and everything would talk about it last week. We've got this crazy 2 day where we've got the FOMC right backed up to the CPI, which I can't remember the last time that happened. Right, you got the CPI right there the day before, but interesting enough, if you look at the options chains, things like expected move and all of that, the biggest move is tomorrow for the week, right? And it's a big move for the entire week, but tomorrow's the day that seems to have the largest amount priced into the options chain. So I think this CPI number obviously is carrying a lot of weight, and that makes sense, right? Because the Fed, everybody already knows they're going to do 50 basis points. They've already telegraphed that and said that, right? So I think what the Fed is going to do to move markets. It's going to be the language. It's going to be Powell and his dog and pony show that he does afterwards. Is he going to come across super hawkish, like, yeah, we went 50 basis points, but we're going to keep going at a quarter and we're going to kill this inflation? Or is he going to be like, hey, we need to, be careful here, right? We want to avoid a recession. He says something like that. I think markets rip because that gives that dovish tone that they're really looking for. I reiterate, I've been on this every week. I do still think we're going to see a rally into the end of the year. I think markets want to find a way to go higher, but I think in the new year, all bets are off. In fact, one thing I saw today that's important to note too, the Santa Claus rally time for what the data show, the almanac shows, is actually the 23rd through the 4th this year. So we may not see that much for another week, and then things really kick in. So could be an interesting, time, but I think the trend will be set after the next 2 days.
Yeah, I think I think the Santa Claus rally has now come to mean any kind of bullish move that we have in the whole month of December. So, but it's supposed to be really, it's like the last week and a half or so of the actual cash market. So I'm going to bring up the charts here and point out a couple of things.
And while you're doing that too, one thing that I did notice on the charts that I think is very important because it does hold true very, very consistently. A lot of you guys know that I love the Bollinger Bands as an indicator. They act like the ropes of a boxing ring, right? When a price gets to them, they bend, they don't break, right? It can go hit against the ropes, gets thrown back in. And we've actually got on the daily chart a Bollinger Band squeeze this week. And anytime that you have a squeeze, you can think of it like, I always say, like if you put water in your hand and you squeeze your hand, right? Water comes flying out of there like that. Well, that's kind of where we're at. So we're getting into this week. We've got this huge, market moving event, tomorrow and then another on Wednesday. And we've got these Bollinger Bands that have squeezed in. So this thing's going to pop. And it's going to be a pretty quick move, I think, in either direction that it chooses to go. And so we may see another one of those 150, 200-point moves like we saw in the last CPI, because usually these squeezes don't last more than a few days, especially on a daily chart. So,
yeah, I just brought up the Bollingers. Yeah, you're right. It's almost a set of railroad tracks that we've got here over the last 4 days. Yeah. Of things. All right, just bringing up the cash market. Just this year, the signal that we have to watch out for is what I call the evil lower high. And the evil lower high is when you get people leaning in this direction, leaning to the upside, because they think they know what is held in the future. And we've had this. This was the Jackson Hole lean. We leaned into Jackson Hole, and Powell came out there and said, nope, ain't going to do it. And then we leaned on to this CPI report, and that got destroyed. I mean, we dropped 500 points right after that in the next 2 weeks from that CPI. This was the next CPI that we had, and that actually was a terrible report, but it was so bad that the market priced in and said, well, this has got to be the bottom. It can't get any worse than this. And then we had this report. This was the next CPI that was right there that gapped 100 points higher, over 100 points higher, and kept on going through the. So that was a gap and go day, just massive move to the upside. And so now we're sitting here looking at this thing like, what on earth are we doing? You know, and we looked at the expected move for the next week, and the upper into the end of the week, the upper expected move was about 40.75. So pretty close to the all-time, well, not the all-time, but the recent highs, the relative highs. And then 38.25 was the lower end of that expected move into this week. So we are anticipating a big move. Most of that, and you pointed this out a minute ago, most of that is into tomorrow. So the Fed is going to piggyback on top of whatever the CPI does. And
the thing too that I think that's really glaring on this is you can see that the former resistance has been the support. So we have a very clear line that you can keep seeing where this market's coming down to in this 39.25 to 39.50 range, right? And you can see it right there on the chart. And that's the line to break either way, right? Either it holds or it breaks. And if it breaks, I think look out below. And if not, though, I think you're going to see that run up into that 4,100 range. And if you bring up a weekly chart, the upper Bollinger Band on a weekly chart is about 4,300. So is it possible we could see 4,300 by the end of the year? I would say most people would say no, but if we're going to really use that energy up that's in that weekly chart, which is there, that could get us there. It would be what everybody least expects, right? Well, nobody would call that.
Right.
So.
Now, one thing that's I think is interesting is like, okay, this is clearly resistance up here. This is the descending trend line. This is the 200-day moving average. We talked about this confluence of resistance. We talked about it down here and said, hey, that's our target
this year. Four times.
We talked about that and said, hey, here's our target. This is where we're heading. And nobody would believe it. And then next thing you know, we're up there. But at this point, I think that the majority of people are looking for a move back down, right? So it's like, okay, it's time. It's time for us to do this again. And it makes sense because bear market, right? We've gone through a 600-point average swing, 600-point average swing right off the bottom. Like everything is almost too perfect for this to release to the downside. So the opposite of that, where the fewest number of people I think are looking, would be an actual upside rally. But that's got to get through 4,100. If it does not get through 4,100, this could actually set us up ourselves up for the next. This could be a lower high. If it sets up at 4,100 and is unable to break through there, then, we just don't know. But most of the risks are going to be done for the year. I mean, the market's going to be on its own for the next 2 weeks after this.
Yeah, there's not a ton of data that's going to affect it. And hear me out, everyone, from this standpoint, just from a logic standpoint. Think about, I'm a huge fund manager, right? It's been a terrible year, right? I've got to show returns. I've got to do, I'm going to have to take probably some losses and book those in, but I also want to show some good returns, I want to show that things are, good into the end of the year, right? I want to get that window dressing, if you will. And it would not surprise me to see this market run higher into the end of the year and get everybody on board, right? So this is the key, right? All of a sudden this rally starts, FOMO, fear of missing out. They get everybody on board from these levels, right? They just sold off because the big sell-off we had, that was all the big boys taking some profits off the table. Now they've got things down to a lower level. They get in, they buy this thing up, they run it up into the end of the year. They get everybody and their brother on board thinking, okay, this is it. We got through 4,100, right? We're off to the races. We're going back. It's the bear market's over. The bull market is just beginning, and everybody gets on board, and we get into the first quarter of the year, probably later into January, February, which is always a terrible time. And then they pull the rug out from underneath everybody and sell this thing off to new lows. And then that's what ends the bear.
Well, it could be the next Fed meeting, which is the next Fed meeting is in the end of January. And so
That's
they could
you're
say
right. Yeah.
they could put the blinders on and say, well, we're not at our target rate yet, so we're just going to keep on cranking the screw up. I mean, it's going to be the proverbial straw that breaks the camel's back is that they go one more straw, one more little, whoa, it's almost like Mr. Creosote in that Monty Python film. Like, how about one more wafer thin mint,
Well,
boom.
or the opposite, they decide to stop and even cut. It's when Fed starts cutting rates, typically, that the market tanks. I don't know if you go back and look at the history of this, because if they are cutting rates, that means things are getting really bad. And a lot of the underlying macro things, we've talked about this in the last few sessions that we've done, a lot of the underlying macro things are starting to weaken a lot.
But they won't, they will not, and I'll go to my grave saying this, right? So you guys can all mark this down, but the Fed will not cut before things get to be really, really bad, and that also includes the market. So
always remember, they are always notoriously very late to act, and they stay way too long. And that's why I'm saying you got maybe one more really ripping rally that gets everybody on board, and then the rug pull happens. And so, and again, I could be wrong on that too, but that's just, I've seen this enough times to know we certainly could see that from here.
I guess if I could put an order into the market to say, like, what type of move would I love to see that would get this thing over with? Because right now, we're taking that Band-Aid and it's on the back of your hand and you're just trying to pull it off like, millimeter by millimeter, and it's just agony. And I wish this market would just rip the Band-Aid off and just get this over with. Get the capitulation done with. Get the Fed on the wrong side of the curve, right? We know it's going to happen. It's just a matter of, it's like when you're watching a movie where you know what the plot's going to be before you've even seen it. It's like, all right, let's just get this part.
Train wreck.
Right, let's get this over with, right? Because I agree. I think the path of least resistance may be to the upside for right now. And once everybody jumps on board that train, it's kind of like one of those trains in India where everybody's hanging on the side, they're on top of the roof. And it's going to be one of those things. And all of a sudden, the bridge is going to be out. And
well, you'll know it, right? You got to get the retail investor back in the game to fade them, right? And remember, look, the market doesn't care. The market's going to take the most amount of money away from the most amount of traders as possible. And so a lot of retail traders are still gun shy a little bit. And you'll know it when you start watching CNBC and all these guys over the next few weeks, if we're getting a rally and they're talking about how, hey, this is the turning point. Things are going to go really well. Maybe there's not going to be a recession. I don't think we'll see champagne corks popping, but, when you start seeing those guys all get really positive and it just looks like this thing is just going to go on forever in their eyes and stuff, then we're there. Then that it's the turn's coming right around the corner, and to be careful. Great time to look at maybe selling call spreads.
Yeah. The one thing I learned from a couple of years ago is that when Bill Ackman gets on CNBC and starts issuing, the proclamations of doom, believe it, because he's already short.
Yeah.
So
yeah.
Talk about a guy talking his book. Unbelievable. So yeah, so I think there's a good chance that we come out of, I agree with what you're saying. I think there's a good chance that the market's going to look for some type of good news from this. I mean, it has to, because
it may not start for a week. It may not start for a week. We could go very volatile sideways for the next, through this week into next week before you see it really start. Everybody thought that last year. Everybody thought, oh, this bull market's over. And then literally in a week span, we went up 5% on the NASDAQ. In that final week of the year to put in the final high before everything rolled over. So it's amazing how fast it can happen, especially in low volume weeks.
It is. Well, Dave, do you have any, let's see, I don't think we're going to be on for another couple of weeks then, right? I think we're going to be.
Well, I know we've got, some holiday stuff. We can get a session, if we're together, guys, we'll get it out there and stuff for you. We'll keep putting out like Doc's Market Minute and stuff, and I'll keep throwing some shorts of what I'm seeing out there. But I think for now, guys, this is a great week just to get some popcorn, sit back, watch the fireworks happen. I think by Thursday into Friday, we'll have a pretty clear delineation of the trend that's going to kick in, and then get after it from there. And sometimes the best trade is just not to trade at all, and this is kind of one of those weeks for it. Right now, sim trade, something like that, you want to play around, sim trade a little bit on a strategy or something like that, see how it reacts to a market like this. That's a great time to do that stuff. So definitely, doesn't mean you shouldn't trade at all. Maybe you sim trade and kind of practice a little bit and stuff. But great week to do that. And then I think by Thursday, Friday, you can get back into it and really take advantage.
Yeah, this is a great week to sharpen your saw. Actually, all the way into the end of the year is a great week. This is a great period of time to sharpen your saw and get good at things. Like something that I will do is deliberately get myself into trouble on positions. Mm-hmm. Enter into positions where you know that they're going to be taking heat. Now, do this in sim, unless you're a masochist for things like that. But do it in sim and then practice getting out of difficult situations, because then when you do it in real life with real capital, then you're like, oh, I've done this before, I know what to do. So you're just pressing the trigger, you're just hitting repeat on things. So repetition is the mother of skill, as we say.
All Absolutely. Right. And I think you guys just tomorrow's going to be the day. I think they're calling for a 7-3. We had 7-7 last time, and that was due to a seasonal adjustment in healthcare. So if this thing surprises to the upside, it's going to be some very, very serious reaction. I think we're going to run up into it today and then hopefully continue if that's what's going to happen, or that you're going to get that big sell-off if that thing is way high.
Yeah, we'll see what happens. The PPI was a little bit hot last week, and we still survived that. So somehow we got through it. So all right, everybody. Well, thanks for joining us here today. It seems to be, whether you're joining us here live, we got a fair amount of people here live today, or if awesome. More than likely you're watching this on a replay. Thank you very much. And again, we're not going to be out next week, but I think the week after that, the week of between Christmas and New Year's, we'll find a way to do some kind of remote session.
Right in the midst of the Santa Claus rally, if it's happening. It'll be a good time.
Yeah, I'll be down in Tampa, so I may be on a beach somewhere, but we'll do it. We'll find a way. So thanks, everybody. Thanks for hanging in there, and make sure you tune in. Yeah, tune in to the fireworks tomorrow morning, and we'll talk at you guys soon. Bye now.